Hey everyone, ARM Holdings is slated to report quarterly earnings results Wednesday, March 8th, or I should say May 8th, and investors are curious if they should buy the stock before the company announces earnings. I'll answer that question in this video. I'll also preview what those investors should look for when ARM Holdings announces these results. I'll preview what to look for. So let's get into the figures.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the things I'll be looking for from ARM is where the growth is generating from, or what segment of the business is growing, and royalty revenue is a key area of focus. Now, for ARM, they said in their latest quarterly announcement that they expect ARM will continue to gain market share, especially in key end appliances such as automotive and cloud servers, where the virtuous cycle of more ARM-based chips is going into more products, and that drives more software development, which in turn generates more demand for ARM technology. It's that positive virtuous cycle that ARM is going after. Selling more of its products entices developers to work with its software more often, which then makes its hardware more attractive, and on the upward cycle goes for ARM. Now, they continue and say that this is compounded with increasing performance requirements that continue to trend higher, and higher royalty rates as end products require more ARM CPUs per chip and more advanced ARM technology, such as the ARM v9. Chips based on this technology now contribute 15% of its royalty revenue, up from 10% the previous quarter. So I'm looking for continued growth in this segment, already jumping by 50% from 10 to 15. I want to see that continue for ARM in this upcoming quarter. Now, management continues to say that the most demanding AI applications are already running on ARM today. For example, name dropping here, NVIDIA recently announced that dozens of new AI supercomputers are coming online incorporating their ARM-based GH200 Grace Hopper 200 superchip. Now, unless you've been sleeping under a rock the last 6 months, you'll know that NVIDIA's GPUs for AI technology are in surging demand. I mean surging demand. NVIDIA's management has said that demand far exceeds supply for its products, and sales have been surging over 200% and growing, and that's just remarkable. ARM partnering with NVIDIA is riding on the back of that tailwind. Now, remember, NVIDIA tried to buy ARM outright, the whole company. The acquisition didn't go through, but that gave investors a lot of enthusiasm about ARM. It seems like whatever company that NVIDIA wants to buy or invest in, it has the halo effect, and it creates this enthusiasm from investors that now become interested in the company because NVIDIA was interested, and that sent the stock price soaring. At one point, ARM's stock price soared from a little under $80 per share all the way close to $150 per share. Now, at that point, I had a lot of investors asking if they should buy ARM stock, and I have not had ARM stock rated as a buy. I've never rated ARM stock as a buy in its short time as a publicly traded company. I've always felt that it's too expensive. I've admitted that it has excellent prospects. The business model is phenomenal, and demand for its products are soaring right now. But the valuation has incorporated that. I can show you how much it's trading for today. A forward price to earnings of 51.33. It's a lot lower than when I last updated it. You could see here I last updated my recommendation on April 3rd, and on April 3rd the stock was trading at a forward price to earnings of closer to 90. So the valuation has dipped considerably since the last time I made my recommendation for ARM stock. I'll update this recommendation a little bit later in the video. The next thing investors should look for from ARM when it updates earnings is bookings. The bookings backlog. The license revenue came in at $354 million, which was up 18% year over year, and strong bookings were due to strong demand for more advanced ARM CPUs as companies increase investments in AI across all end markets. And that's remaining true. So far, the companies that have reported that are related to artificial intelligence, the big hyperscalers, Microsoft and Google, they both reported better than expected results, and they both reported that they're increasing their capital investments in developing artificial intelligence technology. Even Meta Platforms, which is, arguably an AI company, you can categorize it as such. Even it said that it's going to increase capital investment by the billions of dollars to enhance its ability to offer artificial intelligence. So enterprise level spending for AI has continued. At least early results for Q1 2024 has shown that it's persisting. It wasn't just a 2023 thing, it's persisting into 2024. That's all going to be great news for ARM. I want to hear more about that. I want to hear more about ARM benefiting from this trend. Now, ARM told investors that for the fourth quarter to expect revenue at the midpoint of 900 million. But remember, in the previous quarter, it told investors it was going to deliver revenue between 720 and 800 million, but it actually delivered 824 million, above its high end of guidance. So investors have come to expect that in the current quarter as well from ARM. Revenue under 900 million at this point, I think, would be a disappointment because of the enthusiasm in AI technology, because of the numbers we've seen flowing in already. Investors are now upgrading their expectations from ARM. This guidance that management gave was from several months ago. And so investors have said, you know what? The numbers that are coming in have been much better than expected. And so we're upgrading what we expect. Even though you told us to just look for 875 million at the midpoint, we think you're going to do better than that. And so that's been incorporated into its valuation. And it's also telling investors to expect earnings per share between 28 cents and 32 cents. In the previous quarter, it beat those expectations as well. It reported 29 cents after telling investors it will be between 21 and 28 cents. So beating has been incorporated into the expectations from stock market participants into ARM Holdings. As I highlighted earlier, it's trading at a forward price to earnings of 51, a more reasonable valuation compared to the close to 100 forward PE it was trading for a couple of months ago. So to update my recommendation for ARM and to answer if investors should buy before earnings or after earnings, or if they should buy the stock at all, I would say not yet. Because the forward PE of 51 is still elevated. It's still a high valuation for a company that's not developed as much history with investors to be able to pay and command such a high premium valuation at this point. I would say wait. I want to digest these upcoming quarterly earnings results, and I wouldn't be surprised if I upgrade my recommendation. ARM Holdings is close. If the valuation was, I would say, 15% lower than where it is today, I would strongly consider recommending it as a buy. So after the quarterly earnings come out, if the numbers are strong, but the valuation stays the same or comes down, I wouldn't be surprised if I upgrade. Or if the numbers are strong and the stock price doesn't go up by as much as I think it should have gone up, I might upgrade that recommendation. But this dip in valuation is certainly putting ARM Holdings at a range where I'm starting to consider upgrading this recommendation, but just not yet. For now, I'm keeping the stock where it is as a hold, and I will update you, of course, after the company reports its earnings results. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.